Hey, well, listen, we got the ground to cover here. We're talking where the real estate market's heading, what interest rates are doing, what's going on economically. Fun and fearless forecast for 2023. Where's things going? What are we doing?
I got notes. I'm ready to go. They're color coded and everything, Patrick.
Very good. So let's talk about what's going on. So I was on the CBC this morning. They wanted to know what was going on in Calgary, with CBC Calgary specifically, their morning show. And they wanted to know what was going on in Calgary. I was on a podcast where a whole number of, I guess we'll call them experts. They were really in the trenches, realtors, that top 1% of top performing realtors. And we were having a conversation about what's happening in the real estate market. They're primarily focused on Southern Ontario / Toronto, GTA, and Ontario overall. I was very boldly representing mostly Alberta and BC. So there we go. So we're talking, and I tell you what, it's things are slow, things are quiet, things are really confusing and mixed up. Buyers / investors are still making some crazy moves, by the way, but that's a conversation for a different day. So you basically invest Ontario, that's the majority of your investing. And so you're hanging out in Southern Ontario and you're in a number of different regions. So what do you see going on?
Now, I'm dubbing this year, I'm calling it, and the nameplate I'm putting on it is Sleepy 23. That's what I'm calling it. I think this year is going to be a sleepy year for real estate. Real estate specifically, by the way, not necessarily the economy. We'll talk about that, I'm sure, in a second. But real estate, I think, is going to be, that's why I'm calling it Sleepy 23. I think it's going to be relatively flat. I think the big drop has already happened. I don't see much of that drama coming to 2023. I think we're going to leave that behind in 2022. And 2023 is going to be all about being sleepy 23. And I do think that applies across the country, Patrick. I think that, I know, as you and I preach nonstop, is every real estate market is regional, but in general, and when we're doing a forecast, it's like, you're asking me about the forecast, my forecast of real estate, not my forecast of A-class properties in Peterborough, Ontario. I mean, I have a different opinion there. So I think in general, Sleepy 23 is where I'm going with this, Patrick, in terms of the real estate market.
So what do you, how are you responding to people these days when they talk about a bubble? It's a bubble, it's popping, we're going to drop. We've already dropped 35%, didn't you hear? From the peak.
Yeah.
Okay,
I got several thoughts on this. First of all, a bubble is very, very interesting, Patrick. To classify things as a bubble is kind of, this is rhetoric that news people use and news anchors use, and journalism and journalists and people who write headlines use this kind of stuff. But I'll tell you what, Patrick, my properties haven't gone down 35%. Have your properties gone down 35%? My properties have not gone down 35%. Shit, some of them have gone up in value. So I would hesitate, and I would challenge anyone who says that the bubble is bursting or has burst. I would challenge that. I think certain property types that, by the way, certain property types have come down, but certainly not all property types, that's for sure.
Well, no, you're absolutely right. And the other side of it is that we're looking at two primary markets called Toronto and Vancouver. That's where all the stories are built around. They are the center of our universe in terms of population. It's also getting soft, by the way, in Quebec. We look at what's happening in Montreal, for example, and we see definitely some softening there. But again, when we look at how far the market's come down, a lot of the drop in the market is from the anomaly called that amazing peak that we had back in whatever it was, March-ish of 2022. And so then we look at what's going on in the other provinces. Alberta is kind of the anomaly. By the way, itself.
Sorry, Patrick, let me jump in there because it's not, typically you're right. Typically it's Toronto and Vancouver that drive the headlines. In this particular case, though, it's not just Toronto and Vancouver. Most of these headlines are being driven by those. They're not even tertiary markets. I'm talking about the markets that really overheated. Based on the supply and demand and based on low interest rates and based on what happened in 2021, some of those markets, like, for example, some markets on the East Coast that went astronomical. You used to be able to buy a house for 75 grand and it went up to 300 grand in such a short period of time. Those have come back down, not even close to 75 grand, or I'm just using, by the way, just general numbers. My point is that some of those have come way down, and that's what's creating these generalities, Patrick, across the markets. And it's like I said, they're not even, they're not A-class markets, they're not B-class markets. Some of them are not even C-class markets. I'm talking about D-class markets, really, really small population bases that couldn't sustain that kind of price growth. But that doesn't apply to everybody, and it certainly doesn't apply to all property types.
Yeah, and I think that's a really great point that you make. And the other side of it is that when we look at 2022, that kind of anomaly, that peak, and where things have come down to, if that's what you're measuring against, well, then yeah, it looks like, the world crashed and burned. But if you're looking at 218, 219, then it kind of smooths out the numbers. And if you're an investor and you've got a long-term plan, generally not a problem. Where we are seeing the big challenges and the bigger news, I think, is just what's happening with the speculators that went into the difference between speculation, of course, and gambling or investing, right? Yeah. So, and now when we look at the market going ahead, we've got high interest rates. Let's talk a little bit about interest rates. We see the market slowing because rates went up. We know that there's a lot of fear amongst even homeowners, let alone investors, because you've got homeowners who have mortgages coming up. Well, they bought it, let's say their rate was 2.5% or 3%. And now their mortgages are coming due and they're looking at even almost double payments or significant increases in payments. And of course, those who have lines of credit.
Well, I actually think interest rates is one of the driving forces, which, by the way, that's an influencer, not an economic fundamental, Patrick, as you and I both know. But I think interest rates is exactly the reason why we will have a sleepy 23. I think the spring market's going to be very flat. I think you're not going to get a whole lot of action unless you have to move. And there are quite a few people, Patrick, that have to move for death and divorce and new jobs and relocations. Sure. Some people have to move, but if you don't have to move in 2023, given interest rates, you're just bearing down. You're just locking down. You're going to see a lot of. We already had a supply crunch in this country, and you're going to see that get tighter, I think, in 2023. Driven by these interest rates, which, by the way, my forecast on that is I think we're at the top end of this thing. The same way that the drama of the price drop in the real estate market is done. That's a story for 2022. I think that's over. I'm not saying you're not going to get a little bit, but I'm saying most of it has happened. Same with interest rates. I think the bulk of the drama around the massive rate hikes has happened. It's in 2022. I'm not saying we're not going to get another one or two, but I think the bulk of it is out. And I actually think, and I know we're going to talk about this probably sooner or later, is inflation. I also think inflation was a narrative in 2022. I think that's going to be over in 2023. We're not going to be talking about that anymore. And you're going to see the narrative switch to stimulating the economy in 2023. And you're going to see much more of that towards the end of this year.
Wow, that's pretty great. So that's where, okay, so interest rates, what do you think is going to happen in January? Are they going to do a rate increase in January?
No, I think they're going to take a breath. I think they're going to take a breath.
Yeah, I think you can go either way. I'll only because you're saying they're going to take a breath. I'll go with 0.25%. I'll say 25 basis points in January, and it's going to continue to be a conversation for a couple of reasons. And the primary reason it's going to be, the biggest reason it's going to be is because of the increase in food and the increase in fuel, because oil prices will continue to go up. Where we're going to see some great deals happening is as the supply chains have opened up, we know that some of the big stores are getting lots of inventory. They're going to be blowing it out. So there's going to be some great deals to be had, but I don't know how much people are going to have to spend given the cost of living overall has gone up, the cost of carrying that, because if interest rates don't go down or they just stay flat. Let's just say they stay flat. Doesn't change the fact that.
But I think, and I'm not saying I'm not saying I disagree with you, Patrick, but I think the narrative, they've been pushing the inflation narrative now for, let me just think about this. It's been over a year. It's probably been 15, 18 months. Yeah. They've been pushing inflation. That's going to stop, I think, in 2023. Actually, I think and I think relatively soon, because I think that we've crested that and we're on our way down. That's my thoughts. Well, you and I don't agree on that,
no,
but I
think it's so. I think it's too early. I don't think they'll let it die. I think TIFF, and I think the government will try and change the narrative. It was like when it was happening, they called it transitory. Now they're going to go, we're on the downhill slope, and we'll see what happens. All I know is that a lot of my calls over the past 2 or 3 years have been on point, but my timing, I'm too early. And I think your call around inflation is early. I think it's going to be late 2023 before we see a breath of fresh air in that inflation conversation. I don't think people are going to let it die because it's not going to go away.
But I do think that I think the real estate market is going to be a sleepy 23, as I'm calling it. But a lot of this stuff, interest rates, inflation, all this stuff, it's a lot of noise for real estate investors. So it's going to feel very loud, I think, for real estate investors. But in actuality, you're going to see very, very flat market. I think the spring market, like I said, is going to be relatively flat. I don't think there's going to be a lot of inventory. This market works on inventory. If you got nothing in the market to move, that's why real estate agents are losing their shit right now, because they got nothing to sell. It's like you got a bunch of incredible horses, at the Kentucky Derby, and nobody will let them out of the gate. They're all stuck in the gate. There's no inventory. That's what's happening right now.
Well, and I don't see that inventory changing anytime soon. If people don't have a reason to sell, they're not going to sell, because if somebody's selling, it means they're likely going to want to buy. I mean, you're going to have some boomers that are going, okay, I'm out, I'll take some cash off the table, but that's not going to be enough. The point is that you're going to see inventory stay low, and people aren't going to sell because they don't want to sell and walk into a higher interest rate. That could be part of the challenge. But here's the other issue. We haven't talked about it yet. The floor under real estate, I think, is still immigration. 750,000 people came into Canada in 2022. And it's pretty hard to see demand slowing down if we've got that many people coming in that need to live. I still say that is also part of what's driving our inflation, different conversation. But ultimately, when in the housing market, especially from the rental market, as people are coming in, they need a place to live, and they mostly are not going to be able to buy, so they're going to rent, and that rental market's going to stay very strong.
Yeah, I think the rental market is going to be strong, but like I'm going to call it a sleepy 23 as well, because I think that we over the last 12, 15, 18, 24 months, we've had phenomenal growth. Other than certain types of real estate, we've had some good growth in rental rates. There's no doubt about it. So I think that you're going to be holding steady this year in terms of renters. If you're a landlord, if you're a rental housing provider, and if you're renting, I don't think you're going to be increasing your rents in a big way, because there's only so much those rents can go up. And I think you're really much at the top of them. And luckily, because of interest rates and because it's so expensive to own a home, that has allowed landlords to push up their rates. But all of this stuff has to stay in balance, Patrick. And, it's a very fine balance. It's called equilibrium. And it's going to take another, year, 2 years, and maybe more to put this entire economy back in its balance, back in its equilibrium. When you shut down the world's economy on a week's notice, like what happened in March of 2020, man, I honest to God, first of all, I didn't think it was possible we could do it. And they did it. I really didn't think. I thought a lot more would break. A lot, that hasn't happened. But I am surprised, and now I'm starting to understand how long it takes to get this stuff back in equilibrium. And I thought it would happen faster, quite frankly. I thought, okay, now that it would start up faster and things would get back in balance faster. That has not proven the case, and I think it's going to be a while. I think another year or two until we can even call it back in equilibrium.
Yeah, so that's where we're at today. But your catchphrase or your catchword seems to be sleepy for 2023. What should investors be doing? I think, when I look at, we go across the country and we look at, okay, we got the economy in different provinces, different cities. We look at Alberta being the standout on the real estate, well, just overall in the economy. What should investors be doing? I see some opportunity on that rent-own/lease-own in Ontario. I think that's still a good strategy. We see agreements for sale as a possibility. What's your thoughts on what investors should be doing? What direction should they be going?
That's a hard question to answer, Patrick, only because, as you know, and as we teach at the Real Estate Investment Network, when we teach people how to invest in real estate, we teach them that, there's a cycle and there's economic fundamentals. Then you have to pick a certain tactic that matches up to the cycle, which matches up to the economic fundamentals and so on and so forth, based on a particular region. That's how you invest in real estate properly and like a sophisticated investor. So I can't say what investors in general should be doing. But what I will say is this, is you will see, I believe, and this is another part of my fun and fearless forecast, is that I think in the next several years, I think the next year, 2 years and more, I think there's going to be what I'm calling a smart premium. And what I mean by that is properties that were really great investments, where there's a great tenant, a great location in a great neighborhood. Those properties will actually command a significant premium to the overall market. And I think that this is where investors have to be better and have to really be sophisticated and invest in themselves in order to learn how to be sophisticated real estate investors and to be one step ahead of that market. Because I think that there are those opportunities where investors could be command that premium if they do real estate right. And, that's one of the phrases you always say, which is so important, is real estate doesn't fail us, we fail real estate. And as we know, doesn't matter if the market's going up, if the market's going down, if the market's going sideways, there's always a great tactic to apply if you understand your region, if you understand your market cycle. So investors certainly should not, I'll tell you the one thing investors should not do, and that is curl in a fetal position and do nothing. That is the worst possible idea, is to do that. Even though it's a sleepy 23 for the general market, I think the sophisticated investors are going to be making very, very calculated moves in order to progress their real estate portfolio in a big, big way. And I'll give you an example right now. I was just talking to a friend of mine who's a very sophisticated investor in Hamilton. He just bought a property on top of the mountain there, on the mountain in Hamilton. Property easily sells for 750, 800 in a normal market. Okay. Last year, given the craziness, it probably would have sold for 900 or 950. He just picked it up for, I think it was $495,000 because he had a motivated seller. There's the kind of deal that doesn't come around in a normal market. It comes around in a market like this. And as an investor, you have to be prepared to jump on those. And every single investor that is looking for those will see them if their eyes are open.
I think there's a fundamental around all of that, right? This hot market in 2022, 2021 got normalized. And we know, being in the game as many years as we have, you got to go hunting. In a normal market, you're not doing what we were doing over the past couple of years. That was the anomaly that has happened. And investors got to get back grounded in the fundamentals that drive real estate. They got to get back and be strategic and thoughtful about how they're going to attract those deals. Like your friend in Hamilton, he went out and found a motivated vendor. I think you're going to find more of those showing up, and you got to be prepared to take action. So it means you got to keep things in order, get your financial house in order, be prepared to pull the trigger on those deals, but also to have a plan.
Yeah, and I'll tell you, and this is something every investor should be doing if assuming they want to grow their portfolio. Every investor should be submitting 4 times more offers than they're currently submitting right now, because you talk about motivated vendors, Patrick, and you're absolutely right that they're out there. I do not, by the way, I don't expect, a big rise in foreclosures or I don't expect that. There are some people that are forecasting that, mostly in the US. I don't see that. I'm focused on Canada, so I don't see that necessarily in Canada. But I will tell you this, that people have to move and people have to, people are motivated. And if you submit more offers, that's the only way I know to run across those motivated vendors, by submitting more offers.
You got to put those offers in. If you're an investor, you got to you got to hang out with investor-focused realtors and an investor-focused team so that those deals are there. We're kind of going back to 2018, 2019, when the market was what the market is. It wasn't coming off this big high where everybody was a real estate genius. And we've seen these cycles before. Everybody was a genius, and then all of a sudden things happened, things changed. So this is kind of common. Okay, so let's move on. Different topic. What's your call for the economy?
One of the things that's interesting is that real estate follows the economy. Capital markets come typically before the economy. I think that you're going to see, GDP slow, but I think you're going to see a lot of headlines around it. But I don't believe you're going to see negative GDP. I think you're going to see it slowing. And you're already seeing that. So, GDP was growing at 2.5% and 2.6% and 2.7%. And you're going to see it go back to our much more normal 1.8, 2, 2.2, 2.1, that kind of range. And you're going to see a lot of friggin' headlines because it's decreasing. But it's not that it's negative. And Patrick, a recession, a technical recession, is 2 negative quarters of GDP, which means the economy is contracting. But people confuse this all the time. A slowing economy is not a contracting economy. Those are 2 different things. And I think you're going to see a slowing economy, which is not a bad thing, but you're not going to see a contracting economy. That's what I think for 2023 from the economic perspective.
Yeah, and I would have a tendency to agree with that. I think we have to look again regionally by province now more than ever. In the past, it was all boats are rising on a high tide. Again, you're going to see the Western provinces, I still think, come out relatively strong. Alberta being the kind of poster child for strength in terms of what's going on. I think anything Ontario, you may see it bump into a negative GDP growth somewhere in about the third quarter of 2023. Maybe we'll see what happens there. But either way, it's not going to be recession numbers. Now, we have to qualify all of it, right? We can be totally wrong about it all, depending on what happens with Ukraine and Russia, what happens with China and Taiwan, what happens even in the UK or in Europe. So we're seeing all of these kind of global macro issues that can really throw a bit of a grenade into any of these conversations and any of these forecasts. But I also think that's one of the reasons that many people are just sitting on the sidelines going, I don't even know what to do, because it feels like it's a ticking time bomb and we don't know when it's going to go up.
Well, would you not agree, though, Patrick, that there's always, and I agree with you, by the way, those are all big global events that have an impact. They influence these things. There's no doubt about it. But those are always there. They've always been there, and they may feel a little bit different now, but they're always there. And when one sorts itself out, there's going to be a new one that's going to come in. It's just the kind of world we live in is these kinds of things. So investors should not let that stuff sideline them, because you did a great video recently on the power of compound interest and the power of time, especially when it comes to real estate, because, compound interest really only works as well as it does when you have time. And that's the biggest disservice investors, give themselves, is they don't give themselves enough time, because they create reasons why they shouldn't and why they can't. And these global macro events are just one of the various mirage of events people are blaming. At the end of the day, what you have to do is you're taking a bet on yourself, Patrick, and you need that time on your side. So the sooner, the better is what I say.
Yeah, and I don't disagree at all. At the end of the day, capital is looking for yield. And where do you go for it? I see GICs are starting to pay more now. So some people are parking their cash in some GICs, still pretty meager return on that investment. Others are going into the US. I think you got to be really cautious and know who you're going into the US with. What is the product that you've got going on? I think there's still tons of opportunity right here in Canada for investors who are just strategic. There's no big race anymore. It's not FOMO. If anything, it's okay. Let's just look for those particular deals that make sense, that cash flow. And we know one thing, I think we can all be pretty confident in the fact that rental demand isn't going anywhere. And if you're going to be a rental housing provider, then this is an opportunity to do that. I think there's one other thing that, we can shine a light on, for investors in Alberta, the past, let's say 8 or 10 years have been pretty meager in terms of cash flows, in terms of any kind of appreciation. But, just recently talked to some long-term investors and RAIN members who said, it's been a grind for sure. But when we look at the mortgage buy down, because interest rates were so low, although I didn't get a ton of appreciation and not even a lot of cash flow in that regard, now it's crazy because their rents are going up, their mortgages have been bought down. They can, 10 years of mortgage buy down is a big number if you're paying attention. And they're actually really enjoying it now. And it took a long time, but at the end of the day, it was all about a financial future. And unless you're doing a fix and flip or a burr, that's what it always is, a long-term buy and hold situation of some sort.
100%, Patrick. I mean, the bottom line is real estate is like like baseball. I hate baseball, but it's a good analogy. You don't win only by doing home runs. You win because you get the singles and the doubles and the triples. And yes, you sometimes get a couple home runs in a game or one home run. But the point is that's actually not what wins you the game. What wins you the game is the singles. Real estate has a lot of that built into it. If somebody's looking for those home runs, they're probably speculators. They're probably looking to speculate on the market. And I got bad news. You're going to get hurt. Speculators always end up getting hurt. If it's not on this deal, it's going to be on the next deal. Don't speculate, invest, period.
Exactly. Okay. So that was that was kind of not really fun. It was a heavy topic. Okay, so what's your thoughts? Any bets on who's going to like take the Stanley Cup? Anything like that? Or like, mid-season?
I'm gonna go watch the World Juniors right now because I'm hoping. I love that hockey. I think Canada's hopefully is going to take that. They're playing right now, so we'll find out. I don't have any bets on the Stanley Cup. I'm gonna go Montreal because I have to go Montreal. So I'm gonna go Montreal on that. I do think one more thing, Patrick, is I do think you're gonna see it. I think this is the year it's gonna happen. I think you're gonna see the equity markets really come back strong. I think 2023 is gonna be it, only because. In my opinion, and what I know is capital markets come first, then comes the economy, then comes the real estate market. And I think if you look at how this decline happened, people exited the capital markets in a big way first. Then you saw the economy start to slow down. Then you saw real estate come down, and it's going to go back up in the same order.
Okay, again, I don't disagree. All I know is that all of my fearless predictions back in 2020, 21, they all came to fruition, but I was way early on my calls, and I think you're early on your call. I don't disagree, but I think it's going to be way late 2023 before we start to have some fun again in that regard, but that's just me.
Well, this is the fun and fearless forecast for 2023. So if it's late 2023, that's still good, Patrick. We'll take that. Hey, we'll take this up in a year from now, and we'll revisit our forecast.
Well, there you go. We got the video. We're here. So we had some watchers. So thanks for viewing, those who joined us. And JG, thanks for taking the time, buddy.
My pleasure.